So as a content creator, there's a lot of things going on right now on the YouTube space, Instagram space, TikTok space about life insurance as an asset, the different things that it will do for you. I've been having a lot of personal challenges, honestly, when it comes to how to create content that is authentic, that's full of education, that's really designing strategies and helping people get the right information and education that will help them solve problems in their life. I am a firm believer in the power of life insurance, and especially cash value life insurance as it fits into our lives to solve different problems that we have. The problem that I'm seeing is there's a lot of hype, and there's a lot of information that's full of half-truths or maybe three-quarters truths and not a lot of substance on the back end of it. And it works really well for clickbait, and it works really well to get people's attention and to capture that attention. And I get there's a lot of people doing this to get attention, and I'm sure some people do really well once they have that attention and they do the right thing for people on the back end, and some people don't, right? But the problem that I have is I'm running into having a lot of conversations with a lot of people that are confused. And the confusion is coming from the fact that they're buying into some of this clickbait type of content, but then they're getting behind the scenes and they're like, wait, if that's not how it works, why would they say that? And it's like, we gotta look into it. So, and we gotta really understand what's going on here. And I think as life insurance agents, as people who are professionals in this business, it's our responsibility to stop marketing to people and start educating people to really understand the nuances of how these products work, understand the roles that these products should play inside of a full financial plan for people, the different problems that it solves for different people in different stages of life, and the different types of people that we're dealing with. Are they real estate investors? Are they business owners? Are they just W-2 employees that have needs with their families and are looking to solve different problems, looking to build emergency funds and maybe build an opportunity fund? Like at the end of the day, a high level real estate investor that's got $1 million to front load into a policy and can do $250,000 a year of premium, that's great. But at the end of the day, for every one of those people, there's 1,000 W-2 employees that honestly just need an emergency fund, and they just need to protect their family. And I feel like sometimes in this business, we get so hyped up about all of the real good potential. But one of the things for me that I love about whole life insurance is that it's the most pure foundational asset that's gonna solve all these different problems for us. And in this video, what I wanna really focus on is the areas that I am seeing kind of the most misrepresentation of whole life insurance. Not that it's a flat out lie in every case, but it's kind of a half-truth. It's a misrepresentation to the accord of, is it possible? Sure. But there are nuanced differences in the way that we use our language, in the way that it actually works, because I just believe that how you go into anything, you need to understand it so you can, because of the fact, I should say, that your level of understanding around it is going to impact your behavior, right? Because everything that we do is emotional, right? The logic will back up our emotional reasons. We need to logically understand so it will impact our emotion on how we show up and behave with our money and the strategy that we utilize with our money moving forward. So that's what we're gonna get into. Personal life, about how life insurance can be utilized and how it's kind of being misrepresented. Now, full transparency, I actually was kind of coming at the infinite banking space in a lot of this, or whole life insurance agents that are talking about the power of whole life insurance. I didn't even really think too much about the IUL space in this. My mind was really thinking about like the misrepresentation of whole life insurance. And I've done videos on these individually in the past, but I'm bringing this up now because I'm really gonna go on a mission right now over the next several weeks of educating and doing a deeper dive into each of these topics. So if you haven't already, make sure you subscribe and hit the bell. That way you're notified when these videos come out, because I'm not gonna do a deep dive in them right now. I'm a big believer that a confused mind always says no. I think every single person in the world at some point in time should get a properly designed whole life insurance policy for emergency fund, for opportunity fund, as a capital reserve fund. I think it's the only financial strategy in the world that will make sure what you want to happen will happen when you want it to happen, whether you're here to see it or not. So I think what happens is a lot of people get really confused and they go, Chris, you're being really, really critical of all these whole life marketing plays, but it was this whole life marketing, conversation that attracted me to this. So if you don't like that, how could whole life be so good? Well, this goes back to the idea that a confused mind always says no. And what I believe is that if you really understood the nuances of how the products work, how they're designed, the flexibility it gives you in life, how your whole life policy can actually make all your other assets perform better from a long-term perspective. And if you knew what I knew about all this, then you would show up and probably implement, execute on a bigger level, and you'd have more motivation because you'd actually understand what this was all about. It wasn't just to solve this one little niche problem. And so what I'm going to do in this video is I'm going to go through a topic. I'm not going to spend a lot of time on it, but I want to bullet point 5 topics that I see happen the most. And if you're thinking to yourself like, man, I got some curiosity around that, I thought that was how it worked, I'm not going to do a deep dive in this video. I'm going to bring it to your attention. And then I'm also going to link, if I have a video right now, I'll link it above. You can go check it out. But also, if I haven't already, or even if I have, I'm probably going to do another deep dive video in the next couple weeks going deeper into this. And I'm going to do a whole series and put a playlist together to make sure that you are educated right about how this stuff actually works. Because unfortunately, we've been living in a market environment, and I want to do this here, and I'll show you these things here. But like, this is the challenge. We've been living in this market environment. And I've done this, if you've watched my videos, since 1980, we had 19% interest rates, right? And then you go down to 2009 and then 2023. So interest rates dropped to 2009 and we're here to 2023. So the challenge is dividend rates dropped and they always chase, right? And they stay above. And now what's happened is interest rates go up, and what's going to happen is, and it's already happened, this has already happened, there's this inflection point that dividend rates are going to chase. So what's happened over the past 40 years, we've had this positive arbitrage situation, this spread, right? This spread in this, where the green line is on top of the white line, that means there's a positive arbitrage potential with a non-direct recognition company. Now what we have here though is a negative spread where the dividend rates are going to be less than. Now that doesn't mean that it's a bad strategy. It just means that like, the difference between principles and circumstance are absolutely relevant, and you need to understand the risks involved in those, right? And so like when you really understand the difference between principle, if you understand the difference between principles and circumstance, then you understand, all right, how does this impact everything that I have going on? And so this is a big thing that I want people to understand. Now, so getting back into this, I'll bring this up. Dividends, gross versus net. The challenge that I have, and I'm going to spend 2 seconds just talking about each one, okay? And I'm not going to spend a lot of time, or I'm going to do my best to not spend a lot of time. So like if a company says they have a 6% dividend, what happens is a lot of people say, well, if I could borrow at 5% and earn 6%, well then I'm earning a 1% arbitrage. But the problem is this 6% dividend is never a net, it's always a gross dividend. Then they have to back everything out. And so what happens is early on in the policy, you're not earning a 6%. Maybe year 12, 13, 14, 15, you are able to earn that 6%. But at the end of the day, the bottom line is you're not earning it right away. You are only earning a net version, not the gross. That 6% is a gross. And so you have to actually calculate the net. And the only way to figure that out is to look at a specific policy designed for you to figure out what it looks like and how it actually works. And you can go from there. So that's the first thing. And once again, I'm going to do deep dives. I'm just going to give you the real high level view on this. Make money buying cars. Now, this is one of the most overplayed concepts on the internet right now when it comes to whole life insurance or IUL or any company, is to think that you're going to make money on a depreciating asset. You are not going to make money on a depreciating asset. The function of buying the car is not what makes you the money. Now, I am a believer that if you're gonna buy the car, you wanna buy the car the most efficient way possible. I actually did a great video on this just the other day, so I will put that video on the end screen because I think it's that good, I think it's that important, I think you need to understand it. So go check that video out on the end screen when you are done watching this video, and that will explain to you the power of, yes, utilizing the policy to buy cars is going to increase your financial efficiency, but it's not about the function of making money by buying a depreciating asset. That is not the concept, because if that's what you're buying it for, once again, emotionally, you are going to behave different with how you make the decisions around that money. Because like, listen, if you believe you can make money on a depreciating asset, you may go buy a more expensive car than you actually should. But if you look at it through the lens of like, hey, I just got to buy this car anyway, so if I'm going to buy it, I want to buy it the most efficient way that's going to lead to, you know, a better long-term financial position for me and my family, well, then that's another situation. And that's what whole life insurance can do. But once again, your understanding of it is huge, right? Compound interest in a policy. You're not earning compound interest. The policy will grow on a compounded basis based on the crediting of dividends in the policy. How you behave with the policy will absolutely impact that policy. I'm going to do more videos. I actually just did an interesting interview with Dr. Bob Murphy who's an economist who is phenomenal with this stuff. And we were talking about this exact concept, and it was actually on his channel. But it was really good, and I'm going to do more content on this idea of compound interest, because I think, once again, it works, but there are nuanced differences that I believe that you should never put money into anything you don't understand. And you need to understand this if you're going to be putting your money into a whole life policy, because if you understand all of these things that I'm talking about right here, then it will impact your decisions, and it will impact and have a wildly positive impact on the rest of your personal finances. But you got to understand all of this, and it is what it is. Managing your policy loans. Like, a lot of people are saying, hey, like, think about it this way. If you could earn 6 and only pay 5, which is what a lot of people are saying, then you never have to pay your policy loans back. I got news for you. If you buy a policy and you don't manage the interest on the policy loan in the first couple of years at a minimum, you are potentially going to run into a lot of problems, right? Now, eventually the policy will get mature enough and you won't have to manage the policy loans. And there are different things that you can do, but I'm going to do different videos going deeper on how to manage the policy loans in different ways, different stages of the policy for different needs, whether you're using it for a car loan, whether you're using it for real estate investment, whether you're using it for volatility buffer in retirement, what retirement income. That's the other thing, is like, I'm going to show you how to kind of manage policies for all that. And I'm going to be doing a lot more deep dive content on all this stuff. Retirement income. This is like a real big IUL problem, right? A lot of people believe that you can, borrow it at 5% and then earn, 10% in the index. Well, that works, but the problem is by doing this strategy and enabling you to have that 5% spread, you actually take on 5% more risk, because if the market does 0% one year, you are fit with a 5% additional expense. And I've done a lot of videos on this as well. I'm going to be doing more, so be on the lookout. So my mission with this channel is to not market to you, it's to educate you, right? That is my main focus. And I'm not the best marketer, and I'm pretty good. Like, I'm obviously really good with the funnel side of stuff, and like, we've got a marketing agency, and that's not what I'm talking about. I'm talking about, like, I'm not very good at the clickbait. I'm not very good at the hype, and I'm not very good at like sensationalization of all this stuff. I guess it's because that kind of element of the business drives me nuts. I really firmly believe in the strategies here. And I believe that everything that I do is about helping people elevate their families and their business and their life to the next level. And I never want to be the reason that you fail. I want only to put you in a situation that you understand stuff to the level where you can execute and you can succeed no matter what. And I never want to have to say I'm sorry. So if you have any questions about this, I'm going to be doing more videos, but hopefully you found value. If you have any questions about any of it, if you have any other areas in marketing that you feel have been misrepresented, leave them in the comment section below. I will do a video on it, because I want to do the best I can to get the best information out there. So that's it. Till next time, have a blessed, inspirational day. We'll talk soon. See ya.